All right, so we don't have a lot of condos in Skagit. Jeff is familiar with a lot of condos further south, so he's gonna be telling us a little bit about things that are changing in the condo market with recent legislation, because next year it could become a lot harder to buy a condo. And even though we don't have a ton here, we do have some. Like if you think there's a lot of retirement communities that have 55 plus homes that even though they look like a detached house, and they are a detached house, they're still titled as a condo, so they'll have the same issues coming up. So what actually has changed with condos?
Well, here's the good news. Based on that last comment on the condos, when they are detached, they do run with different guidelines. They are considered single-family homes. So we actually don't have to worry about those, in particular, like those 55 and older communities, unless, of course, it's a manufactured home community, then it might have some issues. But
so with the 55 plus ones we have that are like stacked units, so
if they're stacked, then those would be condos.
So even though they're condominiumized, how do you say that? Condominiumized. Even though they're condominiumized, even though they say condo on them, and they're a detached resident, they actually follow different rules.
They do follow different rules.
Okay.
It is really nice. I get excited for when I see a condo and it's detached. So all walls have to be detached. You can't have a garage, or even I had one that had like a utility building in between the two, but they were attached through this utility building. That makes it a condo. If it's detached
so if they
completely,
share a common wall in any way.
Yes. Then it's a condo, and these rules will apply. If it's detached completely and it's a standalone, FHA and conventional financing consider that a single family house, and they'll finance it that way. So even on FHA, it does not need to be FHA approved if it's a standalone. That's not what we were going to talk about, but nonetheless, I think it's really great information.
It is good because it clears some stuff up.
I think so too. There you go. You learn something new every day. But the big news is conventional financing, Fannie Mae and Freddie Mac, who, like when you're selling a condo, you're excited when you get a conventional offer because FHA requires special documentation on condos. VA requires special documentation and approvals. I know, it's getting cold. The sea was angry, my friends.
And when you say conventional, that's the majority of homeowners are getting a conventional loan.
Yeah, conventional loan is by far the most streamlined type of financing. It's not as easy to qualify for as some of these other ones, but it has a lot less restrictions.
It is still a government-backed loan.
Oh my God.
It's actually thunder.
Dude, what do you got? You got like a lightning rod?
And he's the tallest one here.
Yeah, dude, you shouldn't be in here.
Conventional versus FHA and condos, but there's legislation that's now that's changing stuff for next year.
So yeah, Fannie Mae and Freddie Mac have come out and said a couple of changes that are going to be pretty impactful. First off, this one's not as impactful, but it's still going to have an impact, is they're going to remove the limited review on condominiums. Limited review means they don't have to analyze as much documentation about the HOA in order to approve it. That was usually available when you were putting 10% or more down on a condominium. You could waive and get the limited review, which helped out a lot and made getting the condominium HOA approved a lot quicker or more efficiently. What they're going to do is remove that, so there's no longer a limited review. So it doesn't matter
how much you're putting down, it's going to be the longer review regardless.
It's longer review and a more in-depth review, which can get scary for HOAs for sure.
Off the top of your head, is there anything you could think of specifically that was on the more thorough review that maybe wasn't on the easier review?
Specifically, it's the budget, and a lot of the financials gets reviewed on a full review, and that was eliminated. The budgets are eliminated on the.
In the budget, for reference, obviously condominium developments, they collect HOA dues from all the members, and then those dues help maintain the facility. So you're saying if the budget isn't as tight as maybe it needs to be, that might be harder to get qualified.
Well, and a big part of the budget is reserves, and that's where we ran into a lot of struggles, and that leads me to the second change that's happening on I think it's January 4th of 2027, so it goes into effect next year, and that is they're increasing the amount of reserves required on condominium HOAs. So instead of being at 10%, which is standard, it's moving up to 15%, and the impact of that is going to be huge. If a HOA is not proactively starting to increase their reserve status right now, they're going to run into major financing problems in the near future, meaning that they won't be able to be financed by conventional financing because the reserves aren't in line. And with that coupled with no longer having a limited review on the HOA,
they're all going to be looking at those.
Those reserves.
That makes sense.
So not only does that impact financing, but it also impacts your HOA dues. Your HOA dues should go up because you're going to have to collect more reserves, potentially, depending on the overall
And maybe
budget.
maybe not their dues, but there might be a special assessment to help bring up that reserve pretty quickly.
Potentially the special assessment, and depending on how tight their budget is. If their budget is super tight and they have 10% allotted, and now they have to go to 15, they're going to have to increase their dues too. So my recommendation, and a strong recommendation, is if you own a condo right now, you want to get in front of your HOA board and tell them about these changes coming down the pike. You need to make sure that you start moving in the right direction to get these changes implemented before the end of the year. There is one other thing that we can do. We can actually do a spot approval for conventional to get your HOA approved for an additional 12 months without having to go through these changes of the 10 to 15% reserve. So if you have a condominium HOA and it's a larger one or even a smaller one, and you're thinking there might be people selling, or you might be selling your condo in the near future, you might want to talk to us about getting that HOA approved into 2027, because that will cover them for that whole year.
So the spot thing, like if they get approved in December of this year, does that spot cover them through December? Even though they don't have the 15% reserves?
Correct, yes.
Okay. So that's
a big positive there.
Yeah.
But those are big changes, guys. If you own a condo, you got to pay attention to these, because financing your condo is a big part of why your value is what it is. If your condo is not financeable because the HOA isn't set up correctly, it's going to be harder to sell. You're going to have more limited buyers, more cash buyers, and they're going to drive down the price, unfortunately. So pay attention to this if you own a condo.
And just to be clear, just so I kind of rattle my brain one more time, if it's a detached condo, these things do not apply. You're just talking about.
Correct. As long as you don't have any attached walls, you're totally fine. Those are really looked at as like a single family residence, so they really don't have any impact.
Dude, thank you. That is good information.
Thank you.
I like this.
Yeah, it's fun.